So, ladies and gentlemen, it's my pleasure to talk about the impact of technology and blockchain on business models and financial industry these days. As you may think about innovation and how long it takes to start, it's very interesting to think about, for example, icing machines, which were innovated in 1848, and it took until 1898 that the last man getting out iced blocks out of the frozen lakes and bringing ice to households stopped to do it the old way. New technology was around in 1848, which is 50 years before the old technology stopped to exist. So we actually talk about a coexistence of classical and new and growing models. The challenge these days is that things are developing much faster. For electricity, it took about 80 years to get ready and to get a lot of people to use it. With the internet, it only took 20 years for everybody to use the internet. So is it just a bubble, what we're talking about, if we talk about digitalization and blockchain, or is it something more important, more fundamental, a paradigm change we are facing? If you look at history, you will see that every 50 years, industries had to change due to new innovations coming up. The famous Kondratiev cycles would show you that. Now, the latest cycle talks about information technology as the basis for changing business models. And what has changed these days? Through the internet, you can get a lot of information within 5 seconds all over the world. So intermediation and information intermediation is not necessary and valuable anymore. So all the business models which are based on intermediation are under pressure because clients don't want to pay that anymore. Today, you can put a 50-page paper on the internet and you can find it worldwide in 1 minute. 30 years ago, you could only do a television spot saying Unicon is a good university, and that was all you could do to reach a lot of people on television. These days, you can put huge papers on the internet. Everybody can find all the information needed within a few time. So, theory of transaction costs would actually tell you that, and there was Ronald Coase who won a Nobel Prize, by the way, in 1997, but he wrote that in 1937. As long as it's difficult to find information and people on the market and you have high transaction costs, you rather hire people and you rather have hierarchical organizations where everybody is employed and is there every day. If search and contract costs get to zero, you will well apply a market solution. So that's the basic transaction cost theory between all the changes, as a background of all the changes we are facing. Another very important aspect, if we think about whether it's a bubble or not, is that the generation Y, that's the orange curve here in the background, will be in the absolute majority as of 2018. So these are young people who grew up with the digitalization. They are used to go to the television screen and not just push the button, but rather move the information as they do it on their iPhone, whereas older people will not do. So these people are informed, they know how to use information, and they only buy products, goods, and services which are of value for them. So if we think about when it's going to be a very, very difficult situation for classical intermediation business models, this will be, as of 2018, even much more difficult to survive with classical models than it has before, because Generation Y will be very consequent in executing. This leads us to the question, how will structures, how will corporation strategy, structure, and culture will change in the future? You can see that we have more networked organization forms, less hierarchical levels. We will have people who are self-conducted, logically informed, and really entrepreneurial. We will have more organizational forms over time, like projects, and less hierarchical long-term activities. And your success will depend on your knowledge and the possibility to connect to others to find new solutions, which is a challenging paradigm for my generation, because we grew up over 20 years by growing in the hierarchy. So this is, of course, not going to happen until tomorrow, but you can find companies these days which select their CEO for 1 year out of their employees. So a complete paradigm change. It's about good solutions, and they derive from different perspectives. So intermediaries are being cut out. As you can see in this slide, there are some examples in the picture. So that would be the financial markets. On the one hand, you have investors and savers. On the other hand, you have emittents and credit buyers. And so far, the banks did that service, or the capital markets. Now, all these fintech startups you see here in the slide, they focus on one aspect of the value chain, and they do it much better and much cheaper. So that's the danger for financial intermediation. So is just industrialization the solution? As you can see here, classical outsourcing in the banking industry has not yet happened. 80% of activities are still being done within the banks. That's the blue part. Whereas in the car industry, it's only 25%. So the first step for us in banking and financial services is to get more industrialized and more efficient. We talk about best-in-class providers of certain activities of the value chain. Is that enough? Industrialized banking? Maybe not, because as you see in the next slides, most of the Generation Y clients will tell you, we don't think banks will be able to innovate and do really what we need. So maybe it's not going to come out of the banks, because only small companies are innovative enough normally to build up the new value propositions. If you would have asked Henry Ford about his recommendation, he said, if I had asked my customers what they wanted, they would have said a faster horse, because at that time you had horses. Nobody knew the word car. So we cannot say how the business models will look in 10 years' time, but we can be sure that technologies such as digitalization and now also blockchain will come up with new prototypes which will be either incorporated in the business models we have already, or they will grow fintechs outside the huge companies, and the industry might completely change, as the car industry already has done. So design thinking, prototyping, collaboration to find ideas in a very quick way together, that will be the new paradigm of working together. Only when you have developed a prototype which you're sure clients want, you will have a very in-depth investment in building products. So design thinking, very important technology. So that would mean that by digital client centricity, by thinking about digital client centricity, we might be able to derive the new models from within the banks if we are open and innovative, if we think across the corner, if we try to incorporate the information, if we talk to our clients, and if we start to think about what will it be. The example we all know is the iPhone. If you would be CEO of BlackBerry, you would be very unhappy, because 10 years ago or 15, BlackBerry was a market leader. They did a good strategy work, but they decided for the wrong options. And once the iPhone was there, everybody enjoyed the option to have emails, SMS, photos, music, everything at the same device. So this is about quickness, it's about prototyping, it's about working together and using new technologies and learning together how they can be implemented. If we would know how the business will look in 20 years, we would all build it right now, but that's something we can't know. What we can try is we can use technologies, work together, and think about how they can be used. And then you have one thing for sure. First, new technologies and innovations are, people smile about them, then they fight against them, and finally they have to accept them. So this happened with the iPhone, once again. And this will happen to all the intermediation business models, because intermediation is not a value inside. So now we talk about blockchain, we talk about digital ecosystems, these are the buzzwords of the future. Maybe some words about blockchain and Bitcoin. If you look at blockchain, it's basically a technology which enables us to even further lower down the transaction costs. I'm not going to go into details right now, but this is very important to bear in mind. It's a technology which enables us to really have the information spread all over the world and in each computer, and so a lot of intermediaries are not necessary anymore. We're not yet sure. National banks start to talk about whether we need currencies in the future, because Bitcoin is one of the implementations of blockchain. It could be a digital currency. It could also just be a digital asset, or it could be a combination. So interesting times. Theories can be rethought, can be rewritten, because we can really think about how we can make use of these new technologies. And this is a fascinating time. Just a very pragmatical example here. Reduction of international money transfer costs can come down to 8% of what they have been so far by using blockchain, or Of course, there's a lot of danger for classical jobs, but I'm sure there will come up new job profiles. So it is a fascinating time for students, for scientists, for innovation managers, and even for top management people in companies and banks, because we can think about how to derive the new business models. And remembering us, there is a clear theoretical background, which is transaction cost theory. So we can start to rethink our models and to rewrite our theories by learning together. Fascinating times, and for us, it's maybe important to understand that it's starting to snow in the picture behind me, because of course dinosaurs were very strong and the little animal on the bottom must have been eaten, but it was able to survive the snow, so he was more adaptable to change than the dinosaurs. So it's up to us to think about how to incorporate new technologies, and we will have two dimensions. We have the classical business models, and we will have new models coming up, which these days we talk about fintechs, we talk about blockchain. So let's enjoy these options, and those who are faster will build up the models which will be successful in the future in the financial industry. Thank you very much.